Let's welcome in Sushil Choksey at this point of time. Sushil, what's your view on the market? Why do you think markets are correcting for the last couple of days?
Good afternoon, Pankaj. Thanks for having me on the show. I think market is taking more of a consolidation mode with a lower bias led by global cues where impeachment of Donald Trump, which resulted a downward slide day before. And I think local earnings season along with mixed flows between FI and domestic, someday positive, someday negative. I think market needs a consolidation and all the positive news which we are looking for, including GST, is out. So I think somewhere, some money is being taken off the table. I think you've seen some large block trades also happening. Plus a lot of QIP and issuance is also around the corner and few have taken place. I think market is finding its own reason in some way to consolidate with a little downward bias here.
Right, but do you think that this fall is a buying opportunity? It doesn't change the underlying trend in the market?
I think if you take a 1 year to 3 year outlook on a fundamental basis, the outlook doesn't remain different than what we've spoken in last few interviews. But I think the market has also climbed reasonably high from demonetization time to today. So it's a nifty return of almost 20% from the lows which we saw on November 8th. And I think some more future outlook betterment which needs a push from rains. That is somewhere around 10th or 15th of June when rains are likely to start early by 30th May, 1st June. So if all India basis we start getting little early rains and if showers are reasonable, I think people will start factoring in a positivity where monsoon is concerned and consumer demand aided by GST where consumer is being spared, barring on a luxury or expensive items. So looking at those scenarios, I think purchasing power will be better in the second half and that would result into a gain in the market led by any further flows, because market is also speculating negativity from a global point, whether it is impeachment of US President, May Fed hike, rate soon, various other combination, and currency volatility. If rupee is appreciating, people are comfortable, but rupee lost yesterday 1% and today I think volatile with 10-20 paisa movement. So people will watch out how the outflows happening between equity and debt market before they take a plunge for further growth on the market.
Right. Also, Sushil, I just wanted to understand that, what happens when there is such a big sell-off in any big market like Brazil? You think emerging markets fund would tend to pull out of emerging markets, which India is also a part of? So there will be that amount of selling which will happen in India?
I don't think so. Brazilian ETFs related or a Brazilian event would lead to negativity on India. Perception in EM can have doubts, but 1 out of 100, 2 out of 100, that depends on the ratio which we see. So it's more a problem which Latin American countries keep facing. I don't think so it's a India-centric or some of the other developing nations problem where this particular event of Latin America can be correlated with markets. Some volatility always impacts any market, so people are always cautious. But I think it's like in this week we've seen what happens to US, and then yesterday US recovered. Today it's a different question. GST rates have been announced. So factors are fast moving off late, and every event is factored in within a day or two. So I think it's also a weekend today. So Friday people must be going light. People like to study result season. Practically all the large caps have reported, barring few exception companies. So I think it's prudent to be a little light at the top. I don't think so anybody is heavily bought into. I think there is more of investment pattern which is visible in the market. So every investor would look at opportunity with a correction. So led by GST, led by US President or any other factor. I think markets are looking for reasons to deploy money, but a healthy correction is not happening.
Right. And what happens, because of GST? Do you think anything interesting, any sector looking interesting after GST, or broadly everything is in line?
I think broadly it's in line, except that some tinkering on goods for consumption it has been dropped, whereas any application starting from auto and small cars have not been spared, which should have been thought about by people. So people will look at it, liquor, small cars, paint, some exceptional movement is there compared to market estimate, but I think this burden will balance between some gains you make out of your day-to-day consumption to something what you buy for a few years. So I think it's more a purchasing power parity of each individual family which will decide between consumption and what you spend on luxury.
What do you make of SBI numbers? So far the details that you have, the presentation that has come in, what do you make of SBI's numbers?
I think corporate bank in specific led by SBI results sounds pretty stable. I think the worst is behind, and I think betterment led by corporate growth and the quality of book where it is concerned. I think negativity should be over, and I think we should look for betterment where future outlook is concerned.
Right. About BOB, the numbers over there, do you think that, or most of the other companies, PNB has declared, BOB has declared. What do you make of the entire PSU pack now?
I think BOB, SBI stand out. PNB had its own issue plus some right back. In the larger bank, Canara Bank also had some exceptional income, but I think Canara Bank stands out compared to others at this point, along with BOB and SBI. And I feel some of the other banks are having some issues which will take another 1 or 2 quarters. But keep in mind the outlook for corporate bank, be it private or public, capability to raise capital for good growth and capital available for any negativity to absorb any of these restructuring packages or haircuts or S4A schemes, which bank is able to absorb and who have provided the higher provision coverage ratio for these bad assets or top 50 customers. So typically all these large banks have 30-40,000 crore of exposure. I was at PNB analyst meet, they said around 30,000 crores and they have provided reasonable. BOB has provided a little higher than the market. SBI I'm sure would have provided reasonable. So you will have to watch out for who has the capability to absorb and move on and target the growth which is likely to be visible in the second half of the year from a capex cycle led by public sector, but private sector should be joining in soon.
Right, but do you think that some of these PSU bank qualify as a good buy now? You've been little bullish on some of the names. You continue to believe that 1 or 2 of these would give solid returns from here?
I think if you take 12 to 24 months, I think they will match some banking index, means relative to some other banks perform well. So I think I have liked of late Vijaya Bank for last 2-3 quarters, and I continue to like. I think management track record for last 3-4 quarters has been excellent. Their retail growth has been very positive, and looks like they will offer some equity at some point, but there is no institutional ownership at all. So if somebody wants to buy quality and growth with gross NPA and net NPA on a lower side compared to any other bank, can comparable to some larger banks also. So I think SBI, BOB, Canara, Vijaya, some of these banks will benefit in near term, and the other banks, be it Union or PNB, I think they'll follow the round in the second round after the top banks. But I think PSU in general will start attracting some money for long-term investors. I'm not expecting in short term anything will happen because we need a lot of clarification on this resolution mechanism which these banks have to absorb in the JLF under the direction of SBI and the ministry, RBI and the ministry.
Right. In terms of private banks, you think they'll continue to do well? That's been a sector that market has liked. Do you think that that will do well? I want to be a little contrarian compared to
a general prudence that everybody would like to buy HDFC, so I will continue to buy for long-term deposit holders HDFC Bank. But I would put some money to use where ICICI and Axis are concerned specifically, because they've underperformed the market for last 5, 7, 8 years. So if you want to do a catch-up story on a recovery with corporate growth and reasonable consumer, I mean their consumer book is also in a good shape and they have resources and capability to raise equity, they can monetize a lot of assets. So based on that, I think if you want to have a reasonable return, downward side is limited on both the banks. So ICICI and Axis would qualify if you want to take a little long-term bet.
Right, but both these banks would be a play on the corporate recovery or the NPA recovery rather than how they are growing?
I think recovery plus growth both will be a combination to work for both these banks, because any recovery would aid them, and growth also they will be able to capture as they find visibility that growth is visible at the same time. So I think any recovery on capex cycle or incremental business, because I feel some 5-10 banks which have problems on raising equity or they are dependent on government to manage the stretch situation will lose some market share in the business, in overall consumer and corporate credit both, because everybody is targeting retail at the same time AA and AAA customers. Everybody can't garner. Who has a better process to deliver will get it. And in the recovery process, NPA management as well as at the same time good quality growth, both would be a balance which will lead to the larger PSU banks as well as these private banks to garner the share.